Okay, great. Now, just for this evening, which is fantastic, we're having a speaker who's been involved in the issue of banks and is familiar with the topic of how banks are financing the climate chaos, especially in the future. And Denise, whom you see, I believe, in a picture up on maybe on your left-hand side of the screen, has been an activist for several years, and she's dedicated to information about this issue of banks and urging people to take action. And Denise's background, very briefly, is in international and human rights law. And she's a native of Turkey, and she represents a new generation of women coming forward in the climate movement and on the very active level. And I really respect that very much. So Denise, please proceed. And before I hand it over to you, in the background is also Tom out of Holland, who is helping out. We work together in a lot of contexts. So please go ahead, Denise. Thank you all.
Hey, Rolfi, thank you very much for the introduction. So as said, I'm Deniz, I'm from Turkey, but now I live in the Netherlands and I work with BankTrack. And with BankTrack, we work on moving banks for better policies. That we will talk about that in a bit. And one of our key publications is Banking on Climate Chaos Report, together with our partners. So today I will be talking about the report a little bit. I will be talking about finance campaigning and also because you're a mostly United States-based audience, I will talk a little bit about United States LNG expansion and how banks are playing a role in it. So for making you wait longer, just share my screen. Okay, I hope you can see my screen.
Yes.
Okay, so first, well, now we're doing the introduction. It would be nice if you could also introduce yourselves in the chat, or at least say where you're from and which organizations are you involved in. Then I will now present the findings of Banking on Climate Chaos. Just a note, this report was published last May, so it's been quite a long time now, and it's a yearly report. So a new version is due next spring or summer. It's a yearly report, so this is just the 2024 version we'll be talking about. And then we will zoom in a little bit in US banks' role, and then finance campaigning and tools. Sorry about that. So what is Banking on Climate Chaos? It's a report that you might have seen around if you're in the climate movement for a longer time, and maybe if you ever campaigned on financiers of fossil fuel projects. But this report focuses especially in banks. It maps out the 60 biggest banks' corporate lending, underwriting, and project finance to fossil fuel companies. When we say project finance, we mean finance directly given to a project as opposed to the company for general purposes. So that's how we kind of have a clear establishment of the role between the money and the fossil fuel project. It also has some ownership of bonds, and it has some bonds, but most of the shares are excluded. And it often has syndicated finance info, which means finance provided in groups. So there should be some calculations made to figure out which banks are the biggest contributors. Why can we only look at syndicated finance? It's because syndicated finance is subject to a lot of regulations, as opposed to deals that are made bilaterally between banks and projects or companies. These are a bit easier to trace. And this report has finance information from January 2016. This is the year chosen because it was the year Paris Agreements was signed, and December 2023, as I told you. So more data about the further dates will come within the next year's report. So coming back to this year's Banking on Climate Chaos is the 15th annual edition. It's been going on for a long time. This year we had endorsements from almost 600 organizations from almost 70 countries. As I said, it tracks financing to fossil fuels, but in addition, it also looks specifically to expansion companies and 10 specific sectors, which we will see in the previous slides. It also has a website with online interactive data, which I will, if I have time at the end, I want to show you a little bit. And these are the partners we put out the report from. Some of them are from United States. Some of them might be very familiar to you, maybe not. Okay, so when we put out this data, we look at two sources. I just wanted to very briefly mention the methodology because it's long and complicated and can also just be a little too technical. But there is an extensive FAQ on the website for those ones who might be a bit more interested in the methodology. And if you still have questions, you can email Rainforest Action Network directly. So this is just a side note about methodology. But basically the financial research is done by Profundo. It's a Dutch research organization, and Rainforest Action Network, which you might know about. Okay, so what's the data about? The data, this is the big number. This is the cumulative number of how much money banks poured into fossil fuel industry since 2016. And it's close to 7 trillion. Well, this is the number, 700 billion is the number that was financed only within 2023. And maybe even worse is that we know that over 347 billion, which is almost half of this whole amount, went to companies actively expanding fossil fuels. So not just to maintain the fossil fuel industry, but actually to enlarge it. So when we look at the banks that top the chart this year, we see a lot of American banks. Basically, JP Morgan Chase is I don't know if you are familiar with it, but it's the worst bank in the world in these terms. When it comes to fossil fuel funding, it's the absolute worst. So it's followed up by Mizuho, which is a Japanese bank. And then we have Bank of America, Wells Fargo, Citi, and Morgan Stanley from United States. And in the mix, we often see Japanese banks, a couple of Canadian banks, and only one bank from Europe or UK, Barclays. This year, we also figured out that 27 banks increased their fossil fuel finance compared to the data coming from the last year's report. And this include, again, some of the US banks, such as JP Morgan Chase, Morgan Stanley, Goldman Sachs, but also some other big banks, such as Mizuho. Again, Barclays is here, and ING Group from the Netherlands, ING Bank, if you're familiar with it. And for many of these banks, we have seen that this increase was caused by the increase in LNG, liquefied natural, not natural gas. They call it natural, but there's nothing natural about it. It's fossil gas, just as a side note. Yeah, that's actually why in the slide it's called liquefied methane gas. But it's the LNG story you all know about. Maybe you're already aware of the expansion, which we will talk about in a little bit. But unfortunately, LNG is being used or being presented as like a transition fuel, or like sometimes we hear some phrases as clean gas, green gas, low emission gas. Even though that doesn't exist, it's all fossil gas. And when it's transported, liquefied, transported and regasified, it even increases emissions even more. There is actually a new study that came out that says LNG emissions are worse than coal, comparing when you calculate in all the emissions from all of these production processes and transportation, its emissions are really bad. But still, because it's portrayed as a transition fuel, the banks somehow find the courage or the opening to invest in this very harmful industry. And since this is increasing, this is still a growing industry, unfortunately, because this financing is increasing, these banks are also de facto increasing their investments into fossil fuels, even though their narrative can be different. and they can say they are financing LNG because they want to do transition, which is really problematic. Okay, this year we have also seen, this is also in the PDF version of the report, we have seen some banks literally backrolling their agreements and their volunteer targets. So JP Morgan Chase changed their mix and put renewables together with other energy sources, which is just create some creative accounting. So they're trying to look like they are investing in renewables more, even though that's not the case. You can read the details in the report. We also saw rollbacks on exclusion policies for coal even, but also Arctic oil and gas. And also we saw 4 major US banks withdrawing from the Ecuador principles this year. It's a voluntary set of standards for banks. For those of you who might not know it, you can just check the website. But the gist here is that the banks are even backrolling from their own voluntary promises. And even though most of these doesn't really have enforcement mechanisms, it shows that banks are just, instead of keeping with their promises, they have been trying to push out the responsibility and just postpone and just go with the industry. Actually, I think last week there was news about a bank. I don't want to mislead anyone, but about a US bank having a different target. So now 1.5 doesn't apply anymore. They were talking about 1.7 or something. But yeah, so we just see that instead of really committing to some kind of energy transition, they are just trying to delay and gain some time. Okay, so what else is in the report? The report specifically looks at 10 more sectors and expansion. These 10 sectors being coal power, gas power, coal mining, tar sands oil, Arctic oil and gas. I'm just not going to list all of them, but it's interesting because if you're specifically campaigning in any of this, like if you're focusing on Amazon, if you're focusing on coal, you can see specific information about these industries in the Banking on Climate Chaos. So just zooming into, I think, 3 of these league tables I added to my presentation just to zoom in to the fossil fuel expansion. So this is not the cumulative data. This is only the data from last year's financing information, just to say that. So last year's biggest fossil fuel expander financier was JP Morgan Chase, followed closely by Mizuho and MUFG, both Japanese banks. So we really see Japanese banks rising in the rankings for expansion. The number 4 that's missing from here is Royal Bank of Canada. And when we look at the cumulative numbers from the Paris Agreement, we will see Citi and Chase is tied. So Citi is also a big expansion bank. It's just, this is because 2023 data, Citi is missing from here. But if you look at the overall picture, Citi and Chase is tied, and number 2 would be Bank of America. So right now, the fossil fuel expansion in the world is driven by these 3 US banks at most. So focusing a little bit on Arctic oil and gas, because Citi is a big financier of this with other European banks. These are mostly Italian banks, UniCredit and Intesa, and Barclays is a US bank. But I just want to highlight Citi's role in financing Arctic oil and gas. When you look at fracked oil and gas, which is, I don't know if you know, but fracking is banned in Europe, which is an angle we try to use in our campaigns here because a lot of gas in US and Canada is fracked, and a lot of that is backed by US banks. Not surprisingly, it's again JP Morgan Chase, Wells Fargo, and Bank of America. I don't want to go into the details of fracking, but if you know about it, it's just very, very bad for everyone, for the environment, for the climate. And top 6 bankers are the top 6 US banks. So this is also interesting data. So in the report, we also don't want to just stay on the level of numbers and data and finance and just policy analysis. So we also try to tie up these numbers to actual stories from the front lines. So I'll try to show you the website in a bit, but basically we have this map of frontline stories. And when you click on any of these frontline stories, you will see the story itself. So what's going on there and what's the harm, and also who's backing it, but also the groups you can follow and support. So I think I took this one as an example in US. Again, I focused on the Gulf Coast. And just one of these, there are so many LNG projects here that I'm going to show in a second. But I wanted to highlight just this one. So when you click on any of these, here we're clicking on Corpus Christi. And basically you can see the summary of what's the issue about it, what's going on, key companies and key banks. And like when you scroll a bit down, now of course I can't, but I'll try to show you again on the website. When you scroll down, it's going to be the groups you can support in this fight. So which groups are busy with this, stopping these projects, and how you can support them is also there. Okay, so I'm gonna need a little assistance from Tom. Do you still see my screen?
Yes, I can see your screen.
Do you see the Banking on Climate Chaos website?
Yes.
Okay, because I don't have a green line, so to me it looks like it doesn't show, but okay. So
it looks perfect, and I'll let you know if something changes.
Awesome. So I'll just continue. So this is the website. Here you can download the report in a PDF version. I'll just show you the landing page. This is the big number. And then here's the frontline stories, favorite part. So we can zoom in. Of course, this is not nearly enough, but this is what we could do. So these are all LNG. There are some other pipeline extensions. This is MVP, Mountain Valley Pipeline. I'm sure most of you have heard of it. Oh, this is in Canada. So, well, because US banks are involved in everywhere in the world, I find it interesting to discover all of these projects. And when you do, here you can see the key companies, key banks, and to learn more, you can visit these and these websites. You can watch this video and support these groups. This year, we are planning to expand this map and add more frontline projects as we do every year. And you can also read these stories in depth, meaning this leads to an article or video, so you can hear about it more. Okay, continuing, we have the Dirty Dozen, which I also presented to you. This is the cumulative Dirty Dozen. That's why it's a little different than the one I showed you. This is topped by Chase, Citi, Bank of America. And also we see some other European banks ranking up, but the one we saw in the presentation was the one represented last year. This is a comparison of the years. So this is also interesting to see. This number going down looks like a good thing at first instance, but there are different reasons. So I wouldn't take this as face value and say the fossil fuel financing is decreasing. It's possible that, for example, the financing isn't necessarily decreasing, but these companies are being financed in more secretive ways. For example, I said syndicated finance is subject to regulations, so it's fine to figure it out and make some calculations and figure out how banks were involved in it. Because this is so regulated and transparent and banks don't like it and they don't like the accountability, they will go, for example, arrange bonds, which will also get them involved in these projects, but not in that obvious way, even though now bonds campaigning is also growing big and there are people tracking bond issuances and there are bond alerts, but these are all new. So traditionally bonds are like a more secretive way of financing. And it's possible that this financing is going down because these are, instead of syndicated loans, these are financed by bonds. But it's still an interesting data to see. This is also a really nice graphic. It shows the big oil here. lists the biggest oil companies and the expanders and the biggest banks. And you can see, like, when you hold this on a bank, you can see which companies those banks are financing. Here you can find the details by sector. So I talked about 10 sectors plus expansion. So if we click on expansion, we will see all of these banks. And by just sliding your mouse over this, you can see the different amounts that belongs to different years. And you can see, for example, let's also do the Arctic oil. Similar way, you'll see the financing changing over the years, but also the cumulative financing and which banks are the worst offenders. Okay, this is very helpful because this is where you can select a company and really just write its name down. And sorry, also because I'm presenting, it's a little bit slow, but yes. So let's say Exxon. Well, this is one of the most populated profiles, obviously, but because it's connected to a lot of frontline stories that we just talked, the reputational risk projects and frontline stories. And here you will be able to see a list of banks financing this company over the years with year-to-year data. Here you can choose the client, so the company or the project. A project is also a company. It has to be established legally as a company. It's sometimes like a venture company, so a couple of companies come together and form this other third company that's usually named after the project. So when you say client, it's the company name, but it can also be the project. We also add project financing data wherever we can. And here you can view them by parent company. So this is also a very helpful view. And here, additionally, we have Reclaim Finance's two trackers that I will talk about in a second. These are policy trackers and NZBA tracker from BankTrack. So this is just a landing page. It's packed with information. Just take your time going around. I would say if your campaign is focusing on an industry, you could go discover the financiers of that industry. Just keep in mind, this is a part of the finance, and this is focused on 60 biggest banks. So if you cannot find financing for a company here, it doesn't mean there is no bank financing. It can be different reasons. It can either be financed by smaller banks, for example, then it wouldn't show here. It can be financed by bonds, then it wouldn't show up here. So that's good to keep in mind. Okay, just going back to my slideshow. Okay, before I move to US LNG, I wanted to talk about finance campaigning strategy and how we actually do finance campaigning. This is because I will give you some examples of actions, and if I can, I will also show you some videos. But before we come to that, I want to talk about the logic of doing these actions a little bit, because the banks are also a part of the system that's, well, driving us to climate collapse. And what's the point in still negotiating or targeting the banks, or what should we consider when we target the banks? So the basic strategy is that banks go in something for money or reputation or for whatever gains it is. So here listed as benefits, it can be profit from the deal itself. It can be enhancing client relations, enlarging their market share, portfolio diversification is important for them. Reputational gain of being involved in a project or financing a company, or even it can also be about government relations. So whatever a deal brings as a benefit to a company, we try to get it's topped by risks. So first of all, there is a risk of what we call stranded assets. This would be, for example, a bank, like no banks, like very little banks still finance coal, but at this point, let's say financing a coal mine in Europe would likely carry the risk of being a stranded asset. This means banks would go into this project hoping a monetary win, and then because of the European regulations, etc., the coal mine or the plant would have to close, and then the bank wouldn't be able to get their returns for the in the beginning assumed 20 more years, let's say, of production. And this is called the stranded asset. And this is a big risk in terms of energy transition. We keep telling banks that coal and gas and oil won't be viable in the very close future. So those will just become stranded assets and they will lose money. And that's why some people are researching the viability of these projects, like how are they going to be affected by regulations, etc., etc. So a lot of work goes into that, but the main message is to be able to tell the banks, hey, you're wasting this money, you're putting your money in fossil fuels, but this is just not okay, but also not beneficial for you anymore. Something similar with reputational risk. So we try to increase the reputational risk of a bank financing a company by, well, first of all, researching it, exposing it, maybe making it public, sending PRs to newspapers, making it interesting for the public that a bank is financing a harmful project, and hence financing the human rights violations are often involved, but also the climate crisis itself. And regulatory and legal risks are similar. There are actually, I think, 2 court cases against 2 different banks, ING Bank in the Netherlands, and if I'm correct, BNP Paribas in France is also facing a court case. ING definitely is facing a court case, that's I'm sure about. And the court case is about, well, I don't know the details about it, but it's basically not adhering to the Paris Agreement and not reducing their emissions is now making them vulnerable to a court case. So all of this just tells us that if we increase the risks and well, we cannot really do much with the benefits, but if we increase the risks, we might be able to deter banks from getting involved in a project. Recently, there were some bonds falling off of Adani. So Adani is a coal company and they just issued some bonds and some banks were interested, and the bond got canceled last week on top of some charges about their CEO, human rights violations at their mines. So there were so many issues about this company that it becomes unfinanceable. And I think that's mostly the gist of finance campaigning, to highlight that fossil fuels are at this age and time are unfinanceable, unviable, unethical. And this is the whole strategy of finance campaigning. So what do we do with this strategy? I would say, like, I don't know much about the audience. I don't know from which part of the climate movement you're in. But I would say climate movement can be almost anything. It can be lobbying, advocacy, whatever, to street protests. So for us on a sliding scale, from advocacy, let's say, to activism, sometimes finance campaigners go to investor briefings to deter investors from getting involved in a project. Often banks appear there as potential investors. So highlighting stakeholder engagement is also important. So we, for example, try to bring frontline communities, which I will show you a video about this. We try to bring frontline communities to bank annual general meetings if they wish so they can directly face the board of the bank and question them on whatever they're financing and talk about the harms they're enduring. So banks are also bound with what we call FPIC, free prior informed consent, according to human rights rules. And whenever they fail to do so, we highlight the fact that they failed to do so. And we also try to get them face to face with affected communities. So finance campaigning can also be use of relevant complaint channels such as OECD, if you're familiar with it. It can be directly engaging with the bank, so meaning asking for meetings with the bank. You don't have to be an NGO to do this. You can also ask it as like, you can also try to get engaged with a bank as a grassroots community or a frontline community. So as I mentioned before, legal action can also be finance campaigning. I've seen people, especially I think Fridays for Future chapters, writing open letters and petitions to banks. If that's your kind of action, brandalism is like changing the street ads. So it's like little street actions, or maybe even giving an ad to a newspaper. I think this was done against Royal Bank of Canada. I don't know if we have any Canadian campaigners, but I remember seeing that in my email and it was really cool. It was about Royal Bank of Canada's financing of fossil fuels, like this whole page newspaper ad. So annual general meeting actions can be both communicative and disruptive, depending on what you like. So when we bring frontline communities, we try to keep things very communicative. We try to make sure that the delegation can take the stage and directly tell the bank the problems about their financing and ask questions if they wish so. Well, it's always possible to visit the bank at their headquarters with any issue you have with the bank. I think we've seen a lot of it happening at the city this summer, but it doesn't have to be disruptive. It can also be more based on communication. It really depends. So I think what I'm trying to say is that there's a lot of different tactics to do finance campaigning. It really has a diverse range, and anything can be finance campaigning, and it doesn't have to look that formal, and it doesn't always have to be about numbers. It can be about stories. It can be about bringing these narratives out there. Basically, as long as you believe that you can, if you can change a project or a company, you can change the fate of a project or a company by targeting the financiers. There's a lot you can do. And sometimes successes of it as well, which I will hopefully have time to talk about. So this will be sent to you. I hope I will try to arrange this via Rolfie, but I added the links of all kinds of tools you can use in finance campaigning. So these policy trackers helps you looking at banks' policies, but more specifically, for example, does a bank have a good policy about coal mines? Or like you'll see if you just go and discover these trackers, there are different categories. So if you want to check the reasons to hit a bank from its policy or the projects they're involved in, there are always sources. If you're more into the investor side of things, you can take a look at Investing in Climate Chaos. And if you want to find a list of companies still doing oil and gas and coal, there are these exit lists compiled by Urgewald. They can be very helpful. For example, we talk to banks and tell them one of our demands is that they would stop financing companies that are on the coal exit list, which is like not that straightforward because it's not that easy to figure out if a company is a coal company. So if a company shows up at the coal exit list, that means it's doing coal, and there will also be proof of it. So you will be able to go and show that to the bank or whoever you're engaging with. Financial exclusions tracker is also an interesting one. It shows the financial institutions that were excluded for a different list of reasons, but the biggest reason for exclusion is climate, as you can guess, and there will be a relaunch this month, so maybe you'll hear about it. And there are some other trackers as well. We recently launched something called Full Solutions Tracker. It shows, so banks often like to tout their investments in renewables, But what do banks mean when they say renewables? Because if they're talking about LNG as a transition fuel, or like if they talk about renewables, but they put CCS in it and they do hydrogen or gray hydrogen, God forbid, I don't know. I cannot go into the details of hydrogen, but basically banks are financing a big list of false solutions under the guise of sustainability investments. And this was the logic of this tracker. It shows what these certain banks consider as sustainable energy. This is just 15 banks for now, but it's going to be expanded by time. It's just a pilot version, but I would, yeah, you could just go and take a look at it. Okay, so finally, coming to the practice of this. We talked about the financial data, how to find it, how to, how to look at finance campaigning, and maybe what we can do to change banks more practically. So I wanted to talk to you about this LNG expansion in the United States Gulf Coast, because as from what I understood from the audience, it's quite close to home for most of you. Okay, so okay, where I start? I think I started in 2010s. So United States had what do they call it? Shale. They gave it a name, probably the audience knows, but I don't know. But they just basically discovered a bunch of gas in the shale gas, and then they needed a new market because they wanted to sell this gas. And by then, apparently, there was an export ban. By then, I wasn't in this job, so I don't know. But there was an export ban on LNG, which was lifted by actually the Democratic administration years ago. And then in the last years, US was already like building for more gas and wanting to sell more gas and was in this mood. And right when this happened, there was this Russia-Ukraine war. And before that, maybe you know, most of the gas coming from Europe was sent by Russia. And then Europe got in was motivated to lean off of Russian gas, which is not really happening, by the way. If you look at the numbers and the analysis, Europe is still getting Russian gas. But under this guise of we don't want Russian gas anymore, Europe made agreements with US. And now, even though fracked gas is banned in Europe is buying this mostly fracked gas from United States. And even worse, most of these areas, this area was already called sacrifice zone, which I hate to use that term, but that's literally what the industry uses. This is not just a saying or a phrase, but they call these zones sacrifice zones. And you probably know more than I do about the Cancer Rally. And then there were already there was a lot of industry already. And now there are 30 more planned LNG expansion, LNG export terminals. So this is the picture we end up with. In the last years, as BankTrack, we have worked a lot of frontline communities from Freeport LNG, Corpus Christi LNG, Texas LNG. I think that was Port Arthur. It's not in this. Yes, Port Arthur LNG. And we tried to bring this issue of LNG expansion in the US Gulf Coast to banks. So now we will also look at the banks financing this. In the tools list I showed you earlier, there was this LNG expansion tracker from Sierra Club. This information is coming from there. It's Sierra Club's energy export tracker finance part. So when we zoom in on finance of this LNG expansion, well, we see Japanese banks. Three Japanese banks are on the top, and then Royal Bank of Canada, and then ING Bank from the Netherlands, JP Morgan Chase, it's never missing from any list, Scotiabank, I think this is also Canadian, and then Société Générale, Morgan Stanley, Santander, Bank of America, Goldman Sachs, HSBC. So this continues. We have been focusing on the European banks on this list. So what did we do? I'm gonna, if I can, this link. Before I talked about AGM actions. This, I really hope you can also hear it clearly. But this is when, in 2022, John Beard from PACAN, Port Arthur Community Network, came as a guest to ING Bank's annual general meeting to face the board himself. It's a 2-minute video. I propose we can watch it in whole. I just need a confirmation from Rolf or Tom about to the voice.
That LNG terminals and other petrochem facilities are...
Do you hear it?
Yeah, we can hear it.
Yeah, maybe you can enlarge the video itself. Yeah, thank you.
Does ING recognize that LNG terminals and other petrochem facilities on the U.S. Gulf Coast and in the Gulf South have a disproportionate negative effect on communities of color and low-income peoples? Does setting targets to reduce financed emissions...
Sorry, sir. LNG... You have to raise a question regarding remuneration. If you don't raise a question now, I will stop your microphone.
Mr. Chairman, if you will allow me to finish and put these out here for you, you can make that determination, and I will be glad to take my seat. But I ask for forbearance to be able to ask these questions.
Be brief.
Yes, sir. Thank you much. Let me say that my community is home to both of the facilities that you've financed. City of 55,000 low-income Black, Latino, and Indigenous people who suffer from high rates of cancer, heart, lung, and kidney disease, suffering from over 12 decades of environmental pollution and environmental injustice. Climate change is real in Port Arthur because we've experienced in the last 17 years 5 major hurricanes. So I ask these questions with regard to environmental racism, with regard to how you use the money and how you use those funds. Because essentially investing in those projects and in such communities is a death sentence to the people that live there. It makes your hands dirty because of what you have done in getting investments, while you and your organization and its stock and shareholders may reap dividends and make money. Poor and the disinvested in those communities die daily.
Okay, thank you. Sorry. I appreciate.
So they're rude. They're gonna they interrupt John and they say, we appreciate the question, but it's not about remuneration, so we won't respond to it. So eventually it seems like it might also seem like a waste of time, but I find this way of action very powerful. First of all, when John was there were a lot of people from the Dutch civil society. There were a lot of different organizations. They all heard this. They all heard the way ING Bank responded to him. And so this was a very important action for us. And we followed up because finance campaigns, unfortunately, can take years for you to get a little success. The next a couple months after this, we did an action at ING Bank in Rotterdam. And well, we hung this banner with Fossil Free Netherlands, together with Fossil Free Netherlands. It says, "Our Gulf is not your sacrifice zone." And there, I think this was Elida Castillo gave a speech in front of the bank. And then last year at annual general meeting, we went with a big delegation. This is a mix of LNG. So this is Melanie Oldham from Brother Bazoria, John Beard again with the megaphone from Port Arthur Community Network, Action Network. Again, they joined, they asked questions, they held banners, and we really coordinated this action very well with grassroots movement and NGOs. Because we got, like, there were the activists wanted to disrupt the AGM, but we talked to them and we said we're bringing in frontline communities and we really want them to be able to talk. So we kind of timed everything and coordinated the disruption. But then, yes, all of our guests got to speak, and we also arranged a meeting with them and us next week. And then finally, it paid off, at least a little bit in the last months. We have got 2 good news from ING. I'm focusing on, I focused on ING during this because I just wanted to kind of follow you from the data to some of the outcomes. Basically, so I told you that this delegation was a mix of steel. So ING also finances ArcelorMittal, which is a company that is linked to a lot of human rights violations. So some of these people here were from the ArcelorMittal and Ternium coalitions. And basically ING, a couple months following this, ING made a new decision and set up some policy changes to decarbonize steel. And I think just 2 months ago, ING finally said that they will not be financing LNG export terminals. So this was seen as a big win in the US by the US delegation, by the partners we work together. There are always some exceptions. For example, ING says this, but they're going to be financing LNG expansion terminals this year. So this starts from 2025. So whatever a bank does can be better. We always say, okay, this is welcome, but you can do better. This can be more comprehensive. It can be more restrictive. You can just do better. So we try to push them to do better, but it's a long road. But sometimes it does pay out. So I just really want to finish on a positive note. And this is my email for any questions, but I think we will do a Q&A now. And then if you still have questions, I will drop my email to the chat. Thank you for listening.
To add to what Denise is saying, you can write your questions, please, in the chat, and then we'll take them one by one. And there was a comment here by Marcus Petz, developing nations say 300 billion COP29 deal is not enough after agreements. And is there, now this is about COP29, but is there a relationship, let's say, with the bank financing behind some of these commitments at COP29 that you might know about?
No, the finance conversations at COP, we didn't get involved in them, but they're basically about public finance and about countries' contributions, and the role of private banks in this is like, even if at some point it's going to be not defined at all by now.
And then I have a personal question. We have a new president that's coming in the United States, and assuming that he loves his Bill baby drill comment and starts to commit on doing things in that area, how do you see the financing of that developing? And do you see any problems first on where he's most vulnerable in that financing if the US government approves of it?
Yes, so I don't know. There's a lot that I can say, but maybe I can just give an example, and that would be easier. A couple months ago, after a lot of actions from our partners in the United States, there was a ban was placed on LNG export terminals by Joe Biden. And there is now extreme pressure. Since then, there was extreme pressure on him to lift the ban. And they even went to the court, and I'm not sure, but I think they won, but the ban is still not lifted. The ban is still there. And this was celebrated by the movement, especially in the Gulf Coast. And now, obviously, with Trump coming back to the office, we expect these kind of bans to be lifted. There will be he wants there to be no rules at all for oil and gas. And yeah, the expansion is already a big problem. It's probably going to get worse with the Trump, but it's not easy to gauge that from here as a European. And our focus has been mostly on European banks, even though we also work with some US banks.
You brought up something also, and people, please do write your question into the chat, but I'll ask another question. You mentioned syndicated loans that were monitorable. You could follow them.
Yeah.
Now, they have one alternative that you indicated that is difficult for you to be aware of, the bond financing. Are there any other techniques that the banks use in order to cover up their financing of the fossil fuel industry?
Do you mean shares? Except
I have no idea how the banks work internally, but I could imagine, just to make this up, and I have no idea about it, maybe they use a third party which they lend money to, and then that third party in turn turns around and lends the money to the oil companies in order to finance a local project.
yes, that's the bonds. Just 1 second that I will try to pull up an information. 1 second. Okay, so a company, any company, will either be announced by equity or debt. And if it's financed by equity, it will be selling its own shares. It will be issuing and selling its own shares. And if it's going to be financed by debt, it's either bank loans or bonds. And bank loans are the type of loans we talked before. So either bilateral loans, which are a bit harder to track, or syndicated loans, which are a bit easier. So most of the information we have is coming from there. And except that, there are bonds. And I think by now, maybe one of the only few organizations focusing on bonds is the Toxic Bonds Coalition. No, they have a website. Sorry, I will just drop it in the group chat. So it's a group of partners trying to track bonds for a list of, I think, 30 companies, and to kind of try to give an alert when banks are interested or when the bonds are issued, so the civil society can do something. But this is basically the two big income of like debt for a company.
Okay, thank you. There is a question here that came from Marcus Petz. Do banks pressurize other banks, and if so, how? And I
Yes.
imagine this is with fossil fuel financing.
Yeah, I think that's a really good question. So yes, we do see banks moving in flocks. So when a bank does something, but it really depends on, so from our conversation with banks, what I understand is that there are like groups of banks. So some banks are in like the same, they move in the same market, they're investing in the same companies. So they're more or less the same, they are more or less in the same situation in terms of assets. So in terms of how big the bank is, or they often work in the same geographical area. So let's say you convince one of the French banks to stop financing coal. It's likely that other French banks will be more likely to follow. And this is because of all of this criteria, like what's their market share, which markets are they moving in, and who are their competitors. So yes, if you can kick some competition out, they will also be more willing to get out of an industry. That's purely because of market reasons. But yes, so that's a tactic we use. Actually, in a little bit more detail in the strategy, sometimes it's good to target a bit smaller, but what we call movable banks first. And then once that bank moves, we kind of hope and strategize for that to create a domino effect. So definitely banks affect each other, maybe not in terms of talking and pressurizing, but in terms of moving together because of the market realities.
Question from Julie Ellefson. Do you have a list of reputable banks and credit cards that do not fund fossil fuels?
Yes, definitely. I mean, it depends on, so in the US, I think Bank Green has a list. Fair Finance International might have a list. This is not the work we focus on, but some of our partners do. For example, in the Netherlands, there is Fair Finance Netherlands, and they have 3 pages, pension investment funds and banks, and they give like them points in terms of how much they don't finance fossil fuels and how good they are in terms of categories. I would definitely advise you to take a look. That's how I personally changed my bank and my insurance company, I think 2 or 3 years ago. Yes.
There were some comments written in the chat box by Marcus Petz, and he gives a link to www.gabv.org. Does that ring a bell to?
Yeah, exactly.
Where?
Global Alliance for Banking on Values. I just listened to one of their presentations, and it indeed has a lot of the good banks. There are definitely some ethical banks, they call themselves ethical banks, that don't have any money in fossil fuels. So it is possible, unfortunately, not in every country and not on the same level of accessibility, but it is possible to keep your money fossil free.
There's some comments there that can be read by others in the chat there. Any questions more direct on which you'd like to have raised in the chat box, please?
Yes, indeed. So in the comments, there's a comment about Ecuador principles. It reminds me of something nice, something important that I forgot to talk about. Yes, indeed, Citi left to Ecuador effort recently to avoid non-compete litigation driven by right-wing nuts. So this is like the ESG crisis that happened in the United States, right? Probably, again, this is something the audience know more about it than I do. But we have also read about these articles about the ESG crisis in the US and basically almost attacks on banks and organizations that care about ESG, which was really interesting to see. I don't know if you have anything to add about this, Rolfi, but indeed, once ESG crisis became an issue, we have seen more of these rollbacks. That seems like a trend.
I know that in Arizona, there are attempts to pressure the city governments not to participate in ESG loans, but then some of them were retracted. The pressures from the more conservative element that thought that the banks would be going too far in their efforts, or let's say the conservative, more radical conservative element would be going too far if they pressured banks not to lend to city governments, for instance. There's been an issue like that a little bit indirectly with Flagstaff, Arizona, which is rather amazing, because that's what they're doing is they're getting banks to do more political work rather than lending work, if you want to call it that. So any more questions from others that they'd like to raise? I have a question that relates to this. If we went more into specifics in a later date, do you foresee that's possible to have a presentation focused on, let's say, specifically the United States and the Southwest of the United States, meaning Arizona, California, Southern California, New Mexico, Texas?
Yes, so I'm thinking of that. I'm not sure how my role will proceed in BankTrack, but also maybe I could connect you to some American organizations who are focusing more on advocacy in the US, because our more or less only connection is the US LNG. And that's, even in that, we deal more with European banks. So I think if you want to target US banks, there are organizations that could help you even better in this. But I would be happy to stay in touch with you, of course.
Pat Ellsworth has a question here. Are credit unions fossil free?
a good.
And that's mainly directed, I guess, towards the US banks where they have credit union system as one way of financing different activities.
Okay. Interesting. I don't know much about credit unions. We don't target them. So I would need to do some research about it. But can you give me an example of a credit union, like as in name? Just-
Mission Branch, I think, is considered a credit union, but I don't want to be held to that.
Yeah.
It
Okay.
happens to be my bank in
That's
San
what-
Diego.
This is Pat Ellsworth. My
Yes.
bank is called One AZ, AZ standing for Arizona.
Mhm.
There are several credit unions in Arizona. I think it's an option for people who want to divest from something like Wells Fargo.
Yeah. Yeah, I'm checking it out now. I think I don't know much about them because they're often smaller in terms of asset, and are they a bit more local?
Yeah.
I think they tend to be.
Yeah. Oh yeah,
I
Marcus.
just did a quick check, and I think that credit unions are kind of the same as banks. One might be more heavily invested in fossil fuels than the other.
Or might not, but maybe I think from the name it sounds like maybe the members have a bit more leverage
Yes.
in terms of the investments. So
Yeah.
yes, and maybe it's easier to green a credit union than greening a bank. And Marcus sent an article from Bank Green about credit unions.
Thank you.
Any more comments or questions by others? So we have recorded this and it will be posted in about a week on the NASCA site. And you can download it if you'd like to see it again. And then if I've understood from Denise, she will be sending out a PowerPoint of this. And we have a list of all of you who are participating, so you'll be able to see some of the facts that were presented. And then I also urge you to go to the location where this report has been issued. It's fantastic, actually. And I think the work that you've all done in that group to get that research completed is just amazing, and it's very helpful for all of us because it shows just how the backbone of the oil industry in the next several years is going to be through the bank financing as it has been, but they have no intention of getting out of that. And maybe as a final question for Denise, assuming that you had a figure, I think it was near close to $8 trillion. How long will that financing take place? Because these banks are planning ahead when they invest in an oil company or make loans to an oil company. They know that they're going to need that loan and pay off that loan in a certain number of years. And that is only recouped by the oil that they, or the liquid natural gas that they're pulling out of the ground. And is that like a 20-year or 30-year frame or less? Do you have any idea of that on average?
That's a really good question. It depends. It depends on whether we're talking about LNG, coal, or whatever kind of power plant. They all have kind of this lifespan. LNG, yeah, I'm not sure. I'm not good with these technical details, but maybe 30 years at least. So we're talking about decades. Every time we're talking about decades. And at an age where we were told to stop by International Energy Agency, every year counts, even if it's 10 years. Let's say you will start building this now, it's going to take 5 years. You will start drilling and exporting more gas from 2030. Like, how is that? Yeah, and this is why we keep using the stranded asset argument, because it's just like, it's not doable. So I sometimes read industry news and I see how industry is struggling with the extreme weather events. Even that in itself, it's really mind-blowing how they think they are going to survive the climate chaos. Like, even the industry itself physically cannot withstand it. They kept having to close them down in Gulf Coast last summer. So yes, we're talking about decades almost every time, and it's unbelievable how they think this can continue. And this is still.
And do you have any idea how much of the loans are coming out of, let's say, private individuals, pension funds,
No, not really.
savings? Because a lot of these people, of course, they plan for their pension and therefore they put their money into a bank account and maybe they invest in the bank in stock.
Yeah.
And these are not just, the richer part of the United States, but also working people. And they will be affected by this too, because somewhere along the line, as you're saying, stranded assets lead to bank losses. And
Yes.
somebody will eat them,
Yeah,
eat
no,
those losses.
unfortunately, we don't work on data about other financial institutions, but I would refer you to Investing in Climate Chaos, and also some partners of us that are doing a bit more general finance work, like Sunrise.
So thank you so much for being on, Denise. It's greatly
Okay.
appreciated. And your presentation is excellent
There's
and very invaluable. And thank you all
there's
for being on.
there's one
this
more
too.
question
Okay.
from Margus, and I don't think you monitor the wood chips being shipped from the US to Europe.
No,
No.
this would be biomass, maybe. Yeah, there are quite a lot of organizations focusing on biomass. Wood chips is quite a specific issue. I also dropped the Banking on Biodiversity collabs because Joe asked for it. Just want to get people's attention to it as well. That's a different set of information about beef, palm oil, timber, pulp and paper, rubber, and soy.
Okay. So thank you all for being on. And to the Arizona group, I'd like to urge you to go in to the NASCA.org website, because we will be building a fossil-free Arizona group. And you're welcome to sign up for that, because we will be more active than we have been in the past. So thank you so much all for coming on tonight or this afternoon.
Thanks for joining. Don't hesitate to send me extra questions. I dropped it in the chat.
Thank you.
Thank you.
Thank you, Tom.
Thank you
Thank
too.
you, Denise.
Thanks.
Bye.